Welcome to this explainer. Today, we're diving into a massive shift happening right under our noses. It's a shift that connects everything from how global workers get paid to how artificial intelligence is governed, all the way to how corporate finance departments actually operate. The core unifying thesis we're digging into today is this: the fundamental plumbing of global money is being completely rewritten as software. We're talking about a structural ground-up transformation of how value moves, how financial decisions get made, and how modern businesses scale across borders. Remember when we used to think a sleek, neon-colored metal debit card was revolutionary? Yeah, those were definitely simpler times in early financial technology. You got a nice app with a clean interface, and boom, that was considered true innovation. But contrast that shiny, surface-level packaging with the deep, complex server infrastructure we increasingly rely on today. Old fintech was primarily about front-end consumer design. New fintech, it's about building the invisible, massive operating system for money itself. And the recurring theme we're going to unpack is that money is fundamentally becoming software, and software is becoming money.
Okay, let's dive right into this. We're going to examine three pillars of evidence today: Deel representing the currency, Experian serving as the brains, and Airwallex handling the plumbing.
Section 1. Deel, the currency. Putting stablecoins on payroll.
So to really understand this shift in currency, let's look at Deel. They're a global payroll giant founded back in 2019 that helps businesses hire and pay people all over the world. Now, normally, navigating international payroll means dealing with the SWIFT network, correspondent banks, heavy foreign exchange fees, and days of just waiting around. But recently, Deel launched a new stablecoin wallet powered by Stripe infrastructure. For years, crypto advocates have been promising us that stablecoins would revolutionize global payments. So we really have to ask, what is the actual killer app for crypto? Beyond all the endless hype and the speculation cycles, what are these digital coins genuinely good for?
I think this analogy hits the nail on the head. Most consumers looked at stablecoins the same way millennials looked at quinoa back in 2012. You know, people knew it existed, they heard the experts saying it was important, but practically speaking, it was just kind of confusing to actually use in daily life. It was like, interesting, but what exactly am I supposed to do with this? But by integrating stablecoins directly into their payroll platform, Deel might have actually solved that lingering confusion. And their solution is surprisingly boring but incredibly effective. Just get people paid without the traditional friction. Deel's new wallet lets users hold digital dollar balances directly inside their platform. Workers can receive their hard-earned funds, hold those balances to hedge against local currency inflation, earn rewards, and then just spend them through a standard Deel-issued card. By packaging digital dollars as a standard, highly effective payroll feature, they bypass the legacy banking system entirely. And the really brilliant part? They barely even market the crypto aspect. It's positioned purely as a digital dollar payroll upgrade. This approach perfectly mirrors the evolution of streaming media. Think about Netflix. Nobody subscribes to Netflix because they're deeply passionate about how content delivery networks and localized edge servers optimize video buffering. I mean, no way. You subscribe because you want to sit on your couch, press play, and watch a show immediately. Likewise, a graphic designer in Argentina or a software developer in the Philippines doesn't care about blockchain rails or cryptographic hash rates. They just care about getting paid faster, cheaper, and more reliably.
So the crucial point here is that stablecoins are finally graduating. They're moving away from being these highly volatile, speculative assets that day traders use to try and get rich quick, and they're becoming actual, boring, reliable financial infrastructure. When technology becomes invisible, that is when it has truly achieved mass adoption. Stablecoins are quietly becoming the rails on which global citizens pay rent and buy groceries.
Section 2. Experian. The brains. Parental controls for AI.
Now, practically every major tech company in the world right now is launching AI agents. But Experian is asking a fundamentally different question. What happens when those agents start making actual financial decisions? They recently announced their agent operating system, which is designed to bring human oversight to AI. To understand why this matters so much, let's set the baseline. AI agents today are incredibly helpful, but they're relatively harmless. They summarize lengthy meeting transcripts, they answer our search queries, they draft marketing emails. It's a massive win for workplace productivity, for sure.
But contrast that with AI agents tomorrow. The stakes escalate immediately. We're moving from drafting casual emails to autonomously approving complex commercial loans, detecting sophisticated international fraud rings, verifying synthetic human identities, and making deep underwriting recommendations. We are talking about serious capital and severe legal compliance here. This is a completely different ballgame that requires an entirely different level of precision.
Because here is the hidden danger of large language models.
It sounds super efficient to have AI handle financial volume, right? Until an AI agent accidentally approves a massive, fraudulent loan application with the exact same unearned confidence your uncle uses when explaining why his fantasy football team is definitely 100% winning the championship this year. Pure AI confidence without a rigorous reality check is incredibly dangerous. Hallucinations in a customer service chatbot are funny. Hallucinations in an underwriting algorithm cause systemic market failures.
At the end of the day, financial services run entirely on trust, and Experian's core business has historically been about trust infrastructure, managing these massive databases of credit history, identity verification, and fraud detection models. Well now, through their Ascend platform and deep API integrations with enterprise companies like ServiceNow, they're extending that vital framework directly into the AI era. Think about how Visa evolved. Visa became indispensable not because they printed plastic cards, but because merchants and banks globally trusted their network to settle funds safely. Experian is making a very similar strategic bet. AI agents are gonna need these trusted, verifiable rails before they are ever legally allowed to handle serious money.
The big takeaway here is that the next massive competitive moat in financial technology won't necessarily belong to the company with the smartest, most capable artificial intelligence. It'll actually belong to the company with the most trusted AI. As digital agents gain unprecedented financial responsibilities, that underlying layer of trust infrastructure becomes exponentially more valuable.
Section 3. Airwallex. The plumbing. Building the financial OS.
To see how the actual plumbing of global finance is changing, we have to look at Airwallex. Founded in Melbourne in 2015, they started off as a cross-border payment specialist. But today, they're quietly evolving into one of the most ambitious financial infrastructure platforms globally by acquiring adjacent companies to complete their tech stack. A perfect example is their recent acquisition of LeapFin. LeapFin is a finance automation platform that specializes in reconciliation. Now, I know reconciliation might sound like dry, back-office accounting terminology, but it's absolutely critical. It's the sophisticated software that explains exactly where the money went, why it moved, and how it maps to revenue after millions of microtransactions occur.
Let's map this out. When we look at the modern corporate financial workflow, we see three distinct, heavy-lifting jobs. Step 1, payments companies like Stripe or traditional banks move the money. Step 2, accounting software like NetSuite tracks the money. And Step 3, reconciliation software steps in to explain exactly where it went to keep the business compliant. Historically, a chief financial officer had to buy, integrate, and maintain entirely different software vendors for each of these steps. It led to massive data silos and major vendor bloat. But Airwallex's strategy? They want to own all three. They want to serve finance teams by flawlessly consolidating this entire fragmented process into one unified system.
Think of this deep financial infrastructure as the offensive linemen of fintech. They're protecting the core assets of the business. Nobody goes out and buys a football jersey because of the offensive line, right? The quarterbacks and wide receivers get all the glory. But you absolutely cannot build a championship-winning team without a robust, unbreakable offensive line. Data reconciliation and money movement aren't glamorous, but they are deeply, fundamentally important to how a multinational business survives and scales.
The critical realization here is that the next generation of fintech winners are not going to be content with just owning individual products or singular features. They are aiming to own entire end-to-end workflows. Airwallex isn't trying to be a specialized widget you plug into your existing business stack. They're actively trying to become the entire platform upon which your business operates.
Section 4. The FinTech Infinity Gauntlet. Synthesis and the Future.
When we zoom out and look at these three distinct case studies together, we are watching the real-time construction of a massive, interconnected ecosystem. Let's recap this new stack. We've got Deel turning stablecoins into reliable global paychecks, proving that digital currency is finally settling into its role as true infrastructure. We have Experian building the necessary governance and parental controls so AI agents can safely execute complex financial decisions without hallucinating. And we have Airwallex expanding far beyond simple payments into full-scale automated financial operations for CFOs. Together, these three perfectly prove our opening thesis. The core mechanics of money are being completely rewritten as software.
Which leaves us with one incredibly important thought to ponder as we wrap up. If money is completely, fundamentally rewritten from the ground up as code, requiring lightning-fast global plumbing, intense AI oversight, and new, borderless digital currencies, who will ultimately control that master operating system? Will it be a single dominant tech giant, a consortium of legacy banks that successfully pivot, or an entirely new kind of company we haven't even seen yet? Thank you so much for joining me on this explainer today. Keep a close eye on these developments because the blueprint for the future of global money is being coded right now, and I really can't wait to see where it leads us next.